Good evening, participants. I, Chaitanya Bansal, on behalf of Team Corporate Law Advisor and CII, welcome you all to our today's session on live channel of ADR laws. In today's session, our experts will discuss the recent judgments passed by Honorable Apex Court and High Courts, followed by a detailed discussion on grievance redressal in financial sector, primarily focusing on NBFCs. The session shall be moderated by Vishwan Jindal sir, who is an advocate and an expert in arbitration, online dispute resolution, mediation, etc. Before we begin the session, I would like to request all participants to please be on mute. During the session, if any participant has any query, feel free to post it in the chat box and they will be duly answered. With these words, I now hand over the dais to Vishwan sir. Thank you.
Thank you, Chaitanya. Good evening, everybody. My name is Vishwam. If you've been attending the previous sessions, you would know that the way we split up this webinar series is generally in two parts. An update session where I deal with the arbitration mediation updates in India and abroad. And the second part is generally a panel discussion and a knowledge session where we pick a different topic. So I think I'll just get started. I'm going to share my screen now. Perfect. So welcome to the sort of May edition of the webinar. We have one webinar every month. If you haven't been attending the previous webinars, you can go on the YouTube channel and watch all of them. So we've sort of had 3 webinars in the past, and this is the May edition now. Just quickly moving on to the agenda for today. Like I said, there's updates and then there's a panel discussion. And as always, feel free to ask any question answers while I'm discussing anything. So no need to sort of hold your questions till the end. I would prefer, if I'm discussing an update from the Supreme Court or High Court of any decision or any jurisprudence, probably best if you ask me a question then. And if there are any expert knowledge or findings or analysis that you would like to share with everybody, I think that would be very helpful. It's probably a learning exercise for all of us together. So maybe I can learn something from what you've done or you've come across. The others in the audience can do the same. So please feel free to put something in the chat box or unmute yourself, and Chaitanya can sort of moderate and we can have a discussion. Thank you. In terms of the updates, we'll be discussing sort of 5 decisions, all 5 of the Supreme Court this time. In the past, we've obviously had a mix of High Court and Supreme Court decisions, but I think there's been a lot of Supreme Court decisions, quite important ones on arbitration. So I think we'll stick to the Supreme Court for today's webinar. So the first decision is PASL Wind Solutions Private Limited versus GE Power Conversion India Private Limited. It was a decision issued on the 20th of April, and it's been in the news, I think, for the past month or so, predominantly because the Supreme Court in this decision clarified that 2 Indian parties can pick a seat outside India for their arbitration. You would remember we've discussed a few cases in the March and February edition of the webinar series where there were decisions of the Gujarat High Court, Delhi High Court, and other high courts. And there was a conflict on whether 2 Indian parties can pick a seat outside India for their arbitration or not. So this controversy has basically been put to rest, and the Supreme Court has said that Indian parties can. So we'll be sort of doing a deep dive today into this session and this decision of the Supreme Court. So to start with sort of background facts, essentially there were 2 parties. The parties are in the sort of there. One was PASL Wind Solutions Private Limited and the other was GE Power. They were both Indian incorporated companies, and they had a contract where the appellant was purchasing some converters from the respondent. A dispute arose with respect to expiry of the warranty of the converters, and the dispute essentially ended up in a settlement agreement. Now, what is important is clause 6 of the settlement agreement, which was the arbitration clause. That's obviously on the screen, but if I may read it out. If the parties are unable to reach any settlement, then they will be referred to arbitration in Zurich. So it's in Switzerland. In accordance with the rules of the ICC, it was further agreed that the substantive law applicable to the dispute would be Indian law. So you can see that the Indian law is the substantive law. The seat is Zurich, and both Indian parties, so they picked a seat outside India. So in terms of the chronology, on the 3rd of July, the appellant issued a request for arbitration as per the ICC rules, and the parties in August then agreed to a sole arbitrator. The respondent then filed a preliminary application challenging the jurisdiction of the arbitration tribunal on the grounds that two Indian parties, which are both incorporated in India, cannot pick a foreign seat of arbitration. This application was dismissed by the sole arbitrator, but what they did for convenience was change the venue to Mumbai, not the seat. So I think it's very important that they decided the venue would move to Mumbai, so the hearings could be conducted in Mumbai, for instance, but Zurich would still be the seat of the arbitration. Essentially, the award was passed and the appellant was ordered to pay 2,59,76,330 rupees and 40,000 US dollars as costs and expenses to the respondent. The respondent then started execution proceedings in India under Section 47 and 49 of the Arbitration Conciliation Act, which, as you would know, it falls in Part 2 of the Arbitration Act. Went to the Gujarat High Court. The Gujarat High Court said Indian parties can choose a foreign seat of arbitration. Again, we discussed the Gujarat High Court decision in the last webinar we had. So there were two issues before the Supreme Court. The first is whether two companies incorporated in India could pick a forum of arbitration outside of India. And the second was whether an award made outside India to which the New York Convention applies would be a foreign award under Part 2 of the Act. So the appellant's submissions were essentially, they made various submissions, but there were sort of three broad categories of submissions. If I try to summarize it. One was that allowing two Indian parties to designate a seat of arbitration outside India would be contrary to the Indian Contract Act, as well as the Arbitration and Conciliation Act. So for the Indian Contract Act, this said Section 23 does not allow it. And for the Arbitration Act, this said Section 28(1)(a) and 34(2)(a). 28(1)(a) essentially says that Indian law applies to Indian seated arbitrations, and 34(2)(a) obviously deals with challenging of arbitral awards for annulment. And they said, this is essentially contrary to the public policy of India. The second submission was that foreign awards under Part 2 of the Act only arise from international commercial arbitrations where at least one party should be foreign. And the third was where they relied on the Inokan decision. And they said, the closest connection test is essentially, if you look at the close connection test, it's where Mumbai would not only be the venue, but also the seat of the arbitration. So the respondent submissions essentially were countering these. They said, firstly, the Contract Act doesn't apply. Neither Section 23 nor 28 applies. And in fact, if you look at Section 28, there is an exception to arbitration. And that's based on party autonomy principle, which obviously contract law is essentially, a tool for party autonomy to sort of encourage party autonomy. They also relied on the United Nations Convention on Trade and Development, commentary on international commercial arbitration, as well as the Supreme Court decision in Sasson Power Limited versus North American Coal Corporation, to say that parties of the same state or the same country can agree to have disputes resolved by a different country. And then they basically go on to talk about Part 1 and Part 2 of the Act and how they're completely mutually exclusive. And it is fallacious to import a definition of international commercial arbitration from Part 1 into Section 44, which essentially lies in Part 2. So they basically try to say, they're completely mutually exclusive. You can't pick a definition from Part 1 and put it into Part 2. And they also sort of looked at the definition of international commercial arbitration in Section 2(1)(f) and said, nationality, domicile, residence is completely irrelevant when you look at Part 2. And they said closest connection test essentially does not apply because in this arbitration clause, which is clause 6, if I take you back to it, it expressly says the arbitration is seated in Zurich. They said the closest connection test only applies when the seat is not mentioned in the arbitration clause. So in this case, it's really not applicable here, which is fair. The Supreme Court firstly agreed with them on the close connection test, saying the seat is expressly defined to be Zurich. So the close connection test does not apply. The Supreme Court then also agreed with them on the definition differences between Part 1, Part 2, and they looked at Section 2 very carefully. So they compared Section 2, subclause 2 with section 2, subclause 1, subclause F. And they said in section 2, subclause 2, if the seat is abroad and the award is enforced in India, then part 2 applies. In section 2(1)(f), if seat is in India, then it applies unless the context otherwise requires, which is what's there in the Act. And then the Supreme Court goes on to look at section 44, which is in part 2, and they said that there are only essentially 4 conditions for section 444 to be applicable. The first one is that it has to be a commercial dispute under the laws of India. The second one is that the dispute must be in persons to an agreement in writing for arbitration, so it has to be in written, which is also a mandatory requirement under the New York Convention. The third one is that the arbitration must be conducted in a country which is a signatory to the New York Convention. So Switzerland is obviously a signatory to the New York Convention. And the fourth one is that the dispute that arises must be between persons. So, legal persons or natural persons. And importantly, the Supreme Court said that there is no fifth element with respect to nationality, residence, or domicile of the parties. As long as these 4 conditions are satisfied, section 44 under part 2 applies. And the Supreme Court goes on to look at freedom of contract and public policy. And they said that there's no clear and undeniable harm caused to the public in permitting 2 Indian nationals to avail of a challenge procedure of a foreign country, especially when enforcement can be challenged under section 48 of the ANC Act. Supreme goes on to sort of, further deliberate into public policy and said that 2 Indian parties opting out of Indian substantive law is actually not against public policy, because the entire point of having a contract is to encourage party autonomy and let the parties decide what they want. And if they want to decide a seat outside India in order to challenge the award there, then that's fine. Let's respect public policy, let's respect contract, and it's not against public policy. They go on to look at section 28, subclause 1, subclause A, and they say if you read it with section 2, 2 and 2(6), then arbitration tribunal has to decide the dispute in accordance with the substantive law in India when the place of arbitration is situated in India, in an arbitration other than an international commercial arbitration. So essentially they're saying section 28(1)(a) does not apply if the seat is outside India. And they also relied on the Atlas export decision to recognize that arbitration is expressly excluded under section 28 of the Contract Act, and that's an exception 1. So the conclusion essentially is that 2 Indian parties, 2 Indian corporate companies can essentially pick a forum for arbitration outside India. So 2 Indian companies, 1 Indian private individual, 1 Indian company, any 2 Indians can basically tomorrow say, we'll pick a seat of our arbitration in Singapore, Zurich, Dubai, Hong Kong, anywhere. And whether Indian law applies or foreign law applies, that's fine. The award will be enforceable in India under part 2 of the Arbitration Act. And essentially, it's been hailed in media as sort of party autonomy winning. So that's essentially the first decision. I don't know if anybody has any questions, comments, thoughts on this decision. Maybe we can discuss that now before I move on to the next decision. Any questions from anybody? Any thoughts? Okay, I'll move on then. So the second decision is the Dakshin Haryana Bijli Vitran Nigam Limited versus Navigant Technologies. Again, a Supreme Court decision dated 2nd March 2021. Essentially, the question here is a very simple question, but a very, very relevant question in litigation, is whether the period of limitation for filing a petition under Section 34 of the Arbitration Act would commence from the date on which the draft award is circulated or the date on which a signed copy of the award is provided to the parties. So if I go back to the factual background, essentially there was a service level agreement between the parties and a tribunal was comprised of 3 arbitrators. On the 27th April, 2 arbitrators sent a draft award. There was a dissenting arbitral award or dissenting opinion, which was issued on the 12th of May, which was again sent in draft to the parties for corrections first. No corrections were suggested by the parties, computational, clerical, typographical, there were no errors. On the 19th of May, the signed copy of the majority award and the dissenting opinion was handed down to the parties and the proceedings were terminated. And on 10th of September 2018, a Section 34 challenge to the award was filed. So just by background, the Arbitration Conciliation Act says the limitation period for filing a challenge is essentially 3 months plus 30 days, as per Section 34. So the district court, in the first instance, dismissed the application, the annulment. They said that the majority award had been made available to the parties on 27th April, and because there were no corrections to it at all, the limitation period expired on 26th August. So if I take you back to the chronology, you can see 27th April was the majority award issued. And then they're saying that the 3 months plus 30 days period ended on 26th August. And essentially, that's outside limitation because the petition was filed on the 10th of September. An appeal was filed to the High Court. The High Court dismissed the appeal, essentially saying it's outside limitation. And then the parties approached the Supreme Court. The appellant said that the majority award alone could not be interpreted to mean the arbitral award, since such a view would render the dissenting opinion pretty much irrelevant. The respondent said that the minority opinion passed by the third arbitrator could not be considered an award because essentially it's just an opinion and you can't really enforce it as an award. So the date should basically start from when the draft majority award was provided. The Supreme Court said that that's not true. You can't differentiate between a majority award and a minority opinion because the Arbitration Act recognizes pretty much just one award. And while only the majority award can be enforced and the minority is just an opinion, the aggrieved party or the award debtor is at liberty to draw support from the dissenting opinion. And the arbitrators essentially relied on Section 31, Clause 2 of the Act to say that it should be signed by the parties. And an award only becomes final when it's actually in writing, and it's when it's authenticated by way of signatures of all the arbitrators on the tribunal. So they relied on Section 31 to basically say that there can only be one date on which the arbitrators issue the award, and that's when it's all signed. So they essentially said, that date has to be the 19th of May when the signed copy of the award was issued to the parties. And if you calculate 3 months plus 30 days from the 19th of May, then 10 September essentially falls within the limitation period. And that's fine. They basically sent the case back to the district court to consider it on merits and said it's not outside limitation. So I guess that's the end of the second decision. Again, if there are any questions, comments, thoughts from anybody in the audience, I think we can discuss them now before I move on to the next decision. No, okay. We're moving quite quickly, I think, because there are no questions. The third decision is the Government of Maharashtra versus Borse Brothers Engineers and Contractors Private Limited. Again, a Supreme Court decision issued on the 19th of March. Essentially, there were 3 appeals to the Supreme Court, and they sort of combined them. One was from the Bombay High Court, one from the Delhi High Court, and one from the Madhya Pradesh High Court. And all essentially deal with what is the limitation period and how do you calculate limitation under Section 37 of the Act. So obviously, once there's an appeal under 34, there's a decision, and if you want to, appeal, then you go under Section 37. Again, this decision has been in the news for over almost 2 months now, because it essentially overrules the NB International versus State of Assam case. Again, for those of you who attended the last few webinars we did as part of this CII series, we had discussed the NB International case, I think, in our January or February edition, which was quite a landmark decision just a couple of months ago on the limitation period under Section 37, and now it's been overruled. So 2 issues came up before the Supreme Court. One was whether the NB International case lays down the law correctly, in as much as it held that the limitation period for filing a petition to challenge an award under 34 can be construed to be a limitation period for filing an appeal under Section 37. And the second was whether the appellate court can actually contain delay in filing the appeal under Section 37. So just to refresh your memories, in the NB International case, the court basically held that the limitation period under Section 37 is the same that it is under Section 34, which is 90 plus 30, so 3 months plus 30 days. And the reason for that is because an appeal is essentially a continuation of the original proceedings. This was changed in this decision, in the Maharashtra versus Borse Brothers decision. And essentially, there are two limbs to what the Supreme Court has held now, will be the limitation period. So if I pick the first limb first, so in the first branch, what they've basically done is, sorry, before I explain the branches, I think let's discuss a previous point. Section 5 of the Limitation Act, which allows the court, a high court or Supreme Court or any other court, to condone limitation, applies to both branches. Now, in terms of both the branches, the Supreme Court looked at the Arbitration Act, they looked at the Limitation Act, and they also looked at the Commercial Courts Act, because generally arbitration are for commercial decisions of commercial disputes. So looking at the first decision, which is on the slide, the court looked at 37 and they looked at 43, and they said it's obvious that the Limitation Act will apply if you look at 37 and 43 together. And they said if an appeal under 37 is against an arbitral award lower than the specified value of the Commercial Courts Act. Does anyone in the audience want to tell me what is the present value, the specified value which the government is notifying in the Commercial Courts Act? Anybody wants to unmute or put it in the chat box? Okay, so it's 3 lakhs as of now. So essentially, the court held that, you know, if the value is lower than 3 lakhs, then Article 116 and 117 of the Limitation Act apply. And then the limitation would be 90 days if it's an appeal to the High Court, or 30 days if it's an intra-High Court appeal. And what happens if the value is more than 3 lakhs? Then they said that the Commercial Court Act would apply, and the limitation period would be 60 days for all appeals. And obviously, like I said in the beginning, Section 5 will apply no matter what, whether your dispute is below 3 lakhs or above 3 lakhs. But it will be quite relevant from a limitation perspective if it's below 3 lakhs or above 3 lakhs, because the limitation period changes. And for Section 5, the Supreme Court also laid down a couple of conditions. They said even though we're saying Section 5 applies now, it has to be used sparingly by the courts. And they laid down 3 factors that the courts should look at. The first one is that the party who is in delay should have acted bona fide and not in a negligent manner. The second is there should be a short delay. So if the limitation period is 60 days, the person probably can't come after 1 year and say, can you please condone the delay? It should be short. Now, what is short is again circumstantial. It could be 1 day, it could be 10 days, it could be 100 days. I think that's for the court to decide, but it should be short. And third is that where the opposite party is not prejudiced of his rights in equity and justice arising from the erring party's inaction and negligence. So unless there's like extreme harm caused to the other person, and if it is, then Section 5 condonation should not be permitted. So again, a very, very important decision as far as arbitration litigation go, to ensure that, you know, arbitral awards are not challenged or annulled in courts. I think this decision, I think, is quite landmark in this respect. Again, any thoughts from the audience? Any questions, any comments before we move on to the next one? No? Okay. So moving on, the Oriental Structural Engineers Private Limited versus the state of Kerala. So essentially, in this case, there was a Section 34 challenge, but we're not looking into the details of the Section 34 challenge because the decision is primarily on when interest can be awarded by the courts or by the arbitrators. And we're talking about pre-award interest here. So essentially the factual, basically the court said, you know, when a contract stipulates payment of interest on delayed payment, but the rate of interest is left blank, in the absence of any exclusionary clause, the parties are obligated to pay interest, and the tribunal or court can decide the rate of interest. So that's essentially what the court held. But let's look at how the court got there. So the facts are that there was a contract. Contract said that a decision has to be given by the dispute review board first, and only then a notice of arbitration can be issued. A unanimous award was then issued in favor of the appellant. The award was passed, Section 34 proceedings were initiated, and they were allowed. So the award was annulled both by the district court and the high court, essentially because the contract had an interest provision, but the rate of interest provision was left blank. So the agreement provided contract, you know, to be paid in local and foreign currency, and the foreign currency was to be paid at LIBOR, which is the London interbank interest rate, plus 2%. The state of Kerala, which is the respondent of the Supreme Court, said that the local currency would be nil. And there were also arguments on whether interest was payable by communication or not. But in the end, the arbitrators did decide that interest was payable, even though the rate of interest clause in the contract is actually blank. So in the Supreme Court, the respondent said, in the absence of any rate of interest, the tribunal created a contractual term that did not exist. And the tribunal basically went beyond the contract term in awarding the interest. The Supreme Court said that unless otherwise agreed by the parties, as a general jurisprudence, the arbitral tribunal can award interest at a reasonable rate from the date when the cause of action arose until the date of the award. And in this, tribunal also relied on the GCR decision, which is a constitutional bench decision of 1992, and said the tribunal could have awarded the interest either as a compensatory or an equitable measure in the absence of an exclusion clause. So like I said earlier, the Supreme Court essentially said that unless there is an exclusionary principle in the contract, interest can be awarded as a matter of right, either as compensation or as an equitable measure. So just looking at the... Hi, does someone have a question there? No, okay. So just looking at the sort of important paragraph here, the Supreme Court said, a person deprived of the use of money to which he is legitimately entitled has the right to be compensated for the deprivation. Call it by any name. It may be called interest, compensation, or damages. This basic consideration is as valid for the period the dispute is pending before the arbitrator as it is for the period prior to arbitration entering upon the reference. This is the principle of Section 34 CPC, and there is no reason or principle to hold otherwise in the case of arbitrator. So in crux, basically the Supreme Court said the blank space for the rate of interest in the contract cannot be considered as cancellation of the clause or an exclusionary clause, which essentially provides for payment of interest on delayed release of funds. So I guess the moral of the story or the conclusion is that if you have a contract, as long as there is no exclusionary interest provision in that, then that's fine. You would be able to claim interest. And you could have a contractual interest clause in the contract with or without a rate of interest. But irrespective of that, you should be fine. You should be able to claim interest as long as there is no exclusionary clause in your contract. So I guess that's the end of this decision. Again, if there are any questions, comments, thoughts, or if anybody wants to share their experiences on this topic, we can discuss it now before I move on. No? Okay. So moving on to the next decision, which is Navyuk Engineering Company versus BMRC. Again, a Supreme Court decision issued on the 5th of March. So in this decision, an arbitral award dated 16th August was made in favor of the appellant, so Navyuk. BMRC then filed a Section 34 petition, which was pending before the additional city civil and sessions judge in Bangalore. On the 21st of December, execution of the award was stayed by the district court. And as you know, there are specific provisions in the Arbitration and Conciliation Act on what has to be deposited or what preconditions have to be satisfied before an award can be stayed. So the additional city civil and sessions judge in Bangalore stayed the execution and said you have to deposit 60% of the award amount, which is 122.676 crores as security. Sorry, and give security for the balance of the amount. This was appealed in writ petition to the High Court. The High Court ordered the deposit of 50% to the principal amount of 56 crores. So they reduced what the deposit had to be. The parties then went to the Supreme Court. And the Supreme Court, if I may read the relevant paragraph, it says, despite this repeatedly referring to Section 5 of the Arbitration Act in particular, and the Arbitration Act in general, and despite this court having laid down in Deep Industries Limited versus ONGC, a 2020 decision, that the High Court under Article 226 and 227 should be extremely circumspect in interfering with orders passed under the Arbitration Act, such interference being only in cases of exceptional rarity of cases just stated to be patently lacking in inherent jurisdiction, we find that high courts are interfering with deposit awards that have been made. This is not a case of exceptional rarity or any patent lack of inherent jurisdiction. So essentially, the Supreme Court made quite a strong observation, as you can see. because if you've been following the Supreme Court decisions, there have been lots of occasions where the district court or the first court of first instance would essentially, say X amount needs to be deposited if you want to challenge the award. And then people go up in writ jurisdiction to the high courts and get their security released or reduced. And the Supreme Court's basically said that that's not allowed. High courts cannot use their jurisdiction, writ jurisdiction under the Constitution to essentially interfere with the Arbitration Act and reduce the security. So the Supreme Court made quite strong observations, in my opinion. And essentially the result is that the High Court order was dismissed and the decision of the additional civil judge was upheld. And essentially BMR had to basically then deposit 60% of the 122.76 crores and provide security for the balance if it wanted to challenge the award. So again, any thoughts, comments, questions anybody wants on this decision? No comments, questions, thoughts? Okay, so I guess that's the end of the first session in terms of updates. If I just move back, so we basically discussed 5 updates, 5 decisions of the Supreme Court. So if you have any questions, any comments on anything, I think we can discuss them now before we actually start a panel discussion. Okay, perfect. So today's panel discussion, so for those of you who attended last panel discussion, we spoke about grievance redressal in the information technology rules, which were passed by the government in the end of February. And the IT rules have been, in the news for a long time now, for more than 3 months now. Today, we're discussing, again, a grievance redressal topic in the context of the financial sector and specifically for NBFCs. We'll also be discussing a bit of ODR, like we've discussed in the previous webinars, specifically for online mediation, conciliation, and arbitration. But we'll also look at online grievance redressal. So to introduce my panelists for the session, so Mr. Ishtiaq Ali, who's the founder of Orbit Law Services, was supposed to join us, but unfortunately he's had a bad incident today, because of which he couldn't make it. But his colleague, Mr. Damodaran Rao, is joining us in his space. Welcome, Mr. Rao, and thank you so much for joining us at short notice. We really appreciate it. The second panelist is Mr. Pradeep Vishwanath. He's the Vice President Strategy at Capital Float. He's had a long experience in different sectors, in the BFSI sector and the telecom sector, and he heads strategy and collections at Capital Float. Capital Float is a digital fintech lender based out of Bangalore, but they have pan-India operations. The third panelist is Mr. Shubham Saket. He's the AVP Legal at DMI Finance. They're also an NBFC based in Delhi. And Mr. Saket has had extensive experience in the BFSI sector. Previously, he was with ICICI, again, based in Delhi and previously in Mumbai. So welcome to all our panelists. What I'll probably do is I'll stop sharing my screen so you can look at me and the panelists. Hi, Pradeep, can you hear me?
Yeah, hi, good evening, Vishwam. I can hear you loud and clear. Okay, thank you for inviting for the webinar first and foremost.
Perfect. So I think what we can do is, I guess we can have, I would request sort of Pradeep to go first, followed by Shubham, just to sort of, set the context and get the ball rolling before we then move on to the panel discussion and a discussion between all 3 panelists. So I'll hand over the floor to you, Pradeep, now.
Yeah, thank you, Vishwam, first and foremost again for inviting for the webinar. And I mean, it was good to know, to hear about the arbitration case which you just highlighted before this call. So just to start off, to put the context on the perspective, on the right picture, now we're talking about the grievance redressal in the NBFC, especially on NBFCs. So there is hardly a major difference between the banking redressal or maybe NBFC. Both works on the same platforms, almost. To start off, as Vishnu was telling to all of you, I have worked almost in 2 decades in different sectors, right? I'm starting from telecom, life insurance, and NBFCs. So I like to, first put a focus on how the sectors typically work on the grievance redressals, So from outside, everything looks to be same. Yeah, there are similarity, but there is a way how they manage very different. So I'll start off with the telecom sector first. I worked for almost for 9 years in telecom sector. I was with Tata, I was with REDRESSAL for almost for 9 years. I worked for them, and I used to manage the entire customer segment, the customer service, the postpaid business, the collection business for them. See, when you talk about telecom is a highly tech-oriented, environment where I think everything works on millisecond billings and and the payouts happens accordingly. So I mean, so people may think there cannot be a grievances coming from a highly tech-oriented industry like that. But typically about grievances, I see two primary reasons for the grievances. One is basically because of the shortness or non-fulfillment of the promised service, which I talked about, the tech issues or whatever coming up. Second is because of breach of the contract. So under this terminology, whatever grievance you talk about in any of the industry, whether it's NBFC or telecom and life insurance or any service provider, it will be under these two categories. So in telecom, I talk about the grievances. Typically, I mean, they are very robust. In whenever any complaints comes in, it's a highly human-intensive industry and a tech-intensive industry. So their timelines are very critical for any instances to get resolved. So the timelines can vary as low as 2 hours to maybe 2 days, also depending on grievances. And there they follow a structured level of approach. It starts from your call center, your appellate, your nodal officer, then to the escalation, the customer service head, then it goes to the tribunals at times. When I say tribunal, it's not a tribunal in that way, it's a consumer court. So, and you can say 90% of the telecom related grievances, they get managed internally in the first two levels, either at the customer service department or at the nodal department. And the closure instantly. It can be a lack in service, it will happen instantly by way of some payout to the customer, or it can be rectification on the complaint order comes in. There are sessions, which complaint which move to the out of the external parties, like it goes to a consumer court. So there are, but you can say that is only for the big ticket size cases which has some value. Now with the telecom, most of things are moved to prepaid segment, so you don't find too much of postpaid business. Even there's a postpaid business, only the section 138 or like this, which goes to the further external parties. But typically in telecom, the turnaround time settlements or turnaround time grievance management is pretty fast. And there are exceptionally very few cases which may take some long time to settle until there is something very bad which either a company or customer is agreeing for. And that's when the try and the tribunal comes in the picture. Now, second, let me talk about insurance sector. I was also in insurance sector again for another 9 years. I work for companies like Max New York Life, ING Life. I work for Star and Daiichi Life. And again, my roles are very versatile roles. I have worked in front-end interaction with the customer. I worked in sales. I worked in credit underwriting. I worked for health underwriting. I mean, whatever talks about the customer service angle, you need to do in insurance. I work in all the domains. Now there, people think, what is the redressal which come in a life insurance sector? Yeah, you are right. I mean, redressal are not too many in the life insurance sector. The redressal typically comes on account of the claim reputation. Because today, a customer buys an insurance, can be health, life, or a non-life also, thinking that tomorrow is uncertain. So we all know tomorrow uncertain. So for the uncertainty, they'll buy insurance, And when you buy insurance, any insurance, it's a highly documented, we sign a lot of papers, like typically sign for loan. And there are at times, because of non-disclosure of fact, which is a breach of a contract, things will come out from there. But there also, they typically follow 80% is a three-tier redressal governance, what they follow, which is basically within the vertical or within the organization, starting on customer care to the grievance nodal officer, the ombudsman, and it happens from there. If something which doesn't get resolved there, it moves to consumer court. There is no arbitration, mediation, or you can say anything which comes to the picture here when we talk about life insurance. Most of the settlement happen, or most of the, the legal aspect will move to consumer court, and the things get settled out there and there itself. But typically the company will try to do it internally. If it doesn't, then only it goes out there. Now, let me talk about the NBFC sector now, which is the current sector which I'm associated for the last 5 years, 5 to 6, 7 NBFC sector as well. So I don't see a major change in all this reversal procedure as such. Now, the customers are same. The procedure are same. It's a 2-tier, 3-tier, 4-tier processor are there, and in every industry there's an appellate authorities there, or there is already like a TRI, IRDA, RBI. There are governing authorities are there which gets into the entire activity. But when you talk about NBFC, and especially a fintech company like us, Capital Float, I'll put this thing into 3 pieces. The first thing is, when we talk about lending category, when we talk about lending business, there are typically 3 categories of business or lending what most of the organization do, our banks also do. One is basically we do a large size secured lending. Second is a unsecured SME lending, which can be a medium and a small size also. And third comes the consumer segment. Now we talk about the large size tickets and lending, or let's talk about unsecured, the SME lending, the current internal mechanism, whatever we have to manage a grievance redressal is very much helpful and is doable. When we talk about internal typically starts from customer care, escalation desk, ombudsman officer, external, are typically the things. And when we talk about external, I may move to arbitration, lok adalat, your mediation and all, blah, blah things will happen from there. Now, when I talk about the large size, the first two categories, the large and small and medium unsecured, this can be managed internally. When I talk about an unsecured consumer segment, which is small ticket size, now it becomes very difficult to manage such customer grievance redressal, because here the sheer volume of customers is too high. Today when talking about SME segment, we may say that we have 10,000, 5,000, depending on the company, how many accounts we have. When we talk about a consumer segment, small ticket size loan, we talk about 1.1 million, 0.2 million, 0.3 millions, and managing that type of redressal, with the existing systems, what they have is a Herculean task. So there are, instances, where we are at times able to do it as per the customer satisfaction. He get convinced. But there are instances where we can't go because the sheer volume doesn't allow, and we can't have the infra built on that place to go behind and do everything for them. So I always see, as I talk also in the first two segments, the big ticket and medium ticket, I think the current redressal procedure grievance, whatever we have is intact and we are doing pretty fine. When you talk about a consumer loan, a small ticket size, I think there is a lot of a need, and that's where typically the online dispute resolution ODR, which we are referring to, will play a bigger role. Thank you, Vishnu. That is from my side to start off. So I hand over the mic to you now.
Thank you, Pradeep. No, I think that was very helpful, both in terms of setting the context, but you also sort of mentioned about telecom and insurance. I think it gives a good picture on how things work across sectors, what are the similarities, differences. Yeah. We'll obviously pick up on a lot of these issues during the panel discussion. Yeah. So thank you for that. If I may move to Shubham now. Shubham, the floor is yours.
Yeah. Hi, Vishwam. Good evening, everyone. Thanks for this opportunity, Vishwam, to allow me to come to this platform and give my views on how exactly ODR is playing a game changer role, not only in the banking sector, but also in the non-banking financial sector in India, because a lot of retail customers, a lot of individual clients are now shifting between banking sectors and non-banking sectors to avail various services. And at the same point of time, the grievances, what they come across, may not be very peculiar what they may be facing 5 years or 10 years back with the nationalized bank, and now when they are doing or availing any services with the NBFCs. Because of the digitalization, because of rampant uses of technology by an average Indian heir in the economy, the fact that the ways of using a financial product has changed drastically. At the same point of time, the lacunas or the grievances have also changed to a certain extent how it was a decade back. So to start with, like in this presentation, first I will talk about the fact that, there has been various kind of complaints which comes from different retail customers or consumers against the bank and against the digital payment platforms. And in order to address this particular thing, since all banks and most of these NBFCs are regulated by Reserve Bank of India, they have rolled out an integrated ombudsman scheme, which actually tries to bridge a gap between NBFCs banking and digital transactions, which happens in our economy. And on the second point, it is pertinent to understand this issue that in order to have any kind of grievance redressal, I think from my perspective, there are three crucial points. First is to, we have to mitigate the jurisdictional challenges. Second thing is to talk about the procedural barriers which come across. And the third is the technical challenges, because these are the three parameters of the grievance redressal. Like if these three issues are addressed in a more holistic way, jurisdictional, procedural, and technical, these things will make ODR more effective. not only for the customers, but also for the institutions, be it banks or NBFC. So the fact that currently in India, there is an ombudsman scheme which is categorized into three parts. It's ombudsman scheme for NBFCs, then there is ombudsman scheme for digital transaction, and then there is banking ombudsman scheme. So the idea of the present government is to ensure that there should be one nation, one ombudsman to approach for grievances redressal. Because a customer may not be only banking, may not be only using financial services of a particular bank or a particular NBFC or a particular digital payment provider. There may be various service providers, and the person may have a grievances against all of them, which may or may not be of the similar in which may or may not be similar in nature. So, in order to address this particular issue, RBI is coming up with this particular guidelines, which my NBFC, we are at a draft stage. We are discussing with various stakeholders, and what I'm being learned that other NBFCs and banks also, they are in process of adopting this technology, adopting this mechanism in a better way to address all these issues, to ensure that these institutions are adhering to the policies and regulations laid down by the government or RBI from time to time. At the same point of time, they are also focusing on minimizing the ticket size of these grievances. Because if you talk about the retail cases, there are various of retail cases which actually takes a lot of time for these huge institutions to address. And because of the ticket size, say there's a dispute ranging from 10,000 rupees to 50,000 rupees. But if you have these cases which is flowing in numbers like thousands, it takes a lot of time for the institutions to address these cases. And at times, certain cases becomes a reputational risk for these organizations, because someone may go lodge a complaint, lodge an FIR, and then not only consumer courts, but also you never know, like if a criminal proceedings at least is threatened, then it becomes a reputational risk for the big institutions. So banks as well as NBFCs are very apprehensive about their credentials getting damaged, because if these grievances are not addressed at an apt or at a specific timelines, it becomes a reputational risk for them. So ODR plays not a very good role, not only for the institutions, but also for the customers. So I think during this course of the discussion, we should try to explore that how it can be a win-win situation and bridge the gap. Because at times it is being said that the lenders are always at an unfair advantage because of the huge institution, because of the plethora of armies of lawyers they have, and the customer sometimes feels very aggrieved because of all these issues. So by way of an ODR, which can be very transparent, which can be accessible to all, because of the digitalization, what has happened in our country is that most of the people have access to the technology. So how this technology can be used to ensure that justice is being delivered to someone who is aggrieved is something we should take up during the course of this discussion. So yeah, thank you, and you can come up with more questions.
Thank you, Shubham. I think that was quite helpful as well. So just, I guess, opening the floor up to all three panelists now, and just taking a step back. So we've obviously heard, Pradeep said that grievance redressal is a challenge in some way when you talk about sort of small lending, or you talk about sort of consumer finance specifically. So if we just talk about consumer finance to begin with, small ticket size loans, NBFCs are issuing, or digital fintech lenders are issuing. Do you think it's been a challenge, and has it been a successful challenge in the sense that, for instance, obviously Shubham comes from a legal background, Pradeep from a business background. Two questions, I guess. One, has it been a challenge to improve customer service and customer satisfaction levels? Or it's been just, like an unwanted compliance burden? It's just, you need to have a compliance, you need to have a grievance officer, you need to have a mechanism in which you need to reply to complaints. Obviously, NBFCs need to report to the RBI on how many grievances were received, resolved, etc. So is it just, a complete failure in the sense that it doesn't help customers, it doesn't help NBFCs, it doesn't help lenders? Or do you think it's generally been a success despite being challenging? It's open for any of the three panelists, and I'd request Mr. Rao to also sort of come in. Does anyone want to go first?
Okay, Vishwam, as I started from in my first talk, also, just some time back, I think the current the grievance redressal mechanism, whatever we have, like even Shubham was talking about the mechanism what we use, so big ticket size loan, I think things are going pretty fine, and this is helping us to improve the customer experience. There's no doubt on that part, because the customer is one of the VOCs we get, and we try to improve products and services. Otherwise, there's no other way that how we are doing it up. So we're talking about big ticket size. I think this is going pretty fine. But I will come to the thing when you come to talk a small business loan, a small ticket loan. So we do a BNPL, that is bill now pay later, like a credit card. Okay. Now you use something this time, you pay 0% interest, and you have to pay by next maybe 30, 35 days or 40 days time. And that case size can be as lower that you may use that line to make your mobile rate of 50 rupees, or maybe paying your DTH of 500 to 600 rupees. But there will be a result which comes in. And you can imagine the volumes. So the volumes are so huge, when you talk a small ticket, the entire system at times collapses. And customers think that, the companies are ignoring them. They are not giving a fair hearing to their grievances. And it impacts the C-score very adversely. Whereas we are trying to help the customer, but where the customer thinks, the company is not hearing to them, but the point is something different. The point is, these cases can't go to an external parties for any, because by spending the cost what they incur on a legal activity in a small ticket size as compared to big ticket size is not comparable at all.
What do you think of the legal side, Shubham, on that?
So, Vishram, I agree with what Pradeep is saying, that with respect to the ticket size, things are going on fine. When you talk about the big ticket size loan, like earlier we had DRT, and now we have with IBC, in financial creditors and operational creditors, they are going to NCLTs to seek relief against the debtors, corporate debtors. However, the concern now largely remains because what exactly is happening in the country, and considering that the judiciary also takes a very lenient and favorable views when it comes to the retail customers. Because for the borrowers or the corporates who have, say, suppose taken a SME loan of, say, 40 crore rupees, if they default, the judiciary mechanism is always towards the lender side to help them to get the recovery, because the lenders in India, if a bank is doing a job, it is the public money. So that is one side of the story. The second side of the story is with respect to the retail borrowers. So if a retail borrower or a retail customer, if they have a certain grievances, and if they go to, suppose they go to a district forum, or they go to, suppose the matter reaches National Consumer Forum, then at that point of time, from the legal perspective also, the courts have taken not a liberal view, but they always try to, that the onus always lies on the lenders to prove legally that if certain penal charges were levied, or if certain grievances of the customer has not been addressed from the legal standpoint or commercial standpoint, the onus always lies more on the lender side. So the NBFCs and banks of late, they have been trying to come up with a solution, because at times what happens that these higher forums of judiciary, be it National Commission or the matter goes to the commercial courts and all, they sometimes levy huge penalties on the banks and NBFCs, which is not only deterrent to their statement of, which not only detrimental to their books, but also to their reputational risk, because the matter comes in the newspapers or media, and then things starts getting affected in a negative way. It adversely affects them, if I may rightly see. So from the legal perspective, what Pradeep is saying, that the retail customers' interest needs to be safeguarded. However, it is very pertinent. Like I came across something with respect to like me as a retail customer. If I am doing a particular digital transaction, so I'll tell you there are several challenges which is there when I facilitate a digital transaction, be with NBFC or with any online service provider who is providing me these line of credit. So, for example, what will happen if I intend to initiate a particular transaction between me as a consumer and a merchant who is facilitating this kind of services. So first I have to go through, number one, I have to go through consumer bank. Number two, I have to go through the payment service, payment gateway provider. Number three, I have to go through the payment processors, because your payment processors and payment gateway provider may or may not be the same entity. Number four, there is always the card network like your Visa, RuPay, MasterCard. Number five, you have the payment system operators, which is NPCI in our case. And at the end, you have the payment authentication agencies, because at times the payment authentication agencies is also an outsourced or a third party vendor. And then finally, you have a merchant bank. So suppose if me as a retail customer, if I come across any issues, there are 7 different entities against whom I face a barrier or a deadlock, because if my transaction fails, I don't know where I have to go. And at times it is always the name or the brand they are interacting with. So suppose if me as a customer, if I'm interacting with a particular NBFC, I will rather go to the NBFC to seek a recourse and ask for losses to be made good, instead of going through these channels like of the card network or the payment service operator or the payment authentication agency, because I may or may not be aware about them. So it becomes very crucial, like in the present sector, in the present scenario, what is happening, that the retail cases, the small ticket size cases are so much in number. And as I have earlier said, that since technology has changed how people avail services and provide services, the nature of complaints have also changed and needs to be relooked at. And in order to relook at, change the pragmatic shift, what has happened, the justice system, the mechanism to provide justice to the aggrieved parties should also be changed, and it should be relooked at.
Thank you. I'll come to that point, Shubham. I just want to see what Mr. Rao, if you had any comments on that. Obviously, you come from a sort of, very different background, working with a law firm, senior partner in Orbis. So I'm sure you have a completely different flavor to what Pradeep and Shubham are saying. Mr. Rao, I think you're on mute. Okay, I think I'll just message him separately to check.
Now,
Hi,
now can you hear me?
Yes, we can hear you now.
Okay. So what I was saying is, I think the experience of Shubham and Pradeep, that is far better than what I have. My perspective will be in respect of the redressal part of it, the consumer redressal forums and all these things. So we have come a long way in terms of grievance redressal, where, like you mentioned, whether it is small or big, there was nobody to take care except when you have some personal relationships with the people who are at the helm of the affairs. But after that, after the enactment of the Consumer Disputes Act, we have come a long, long way. And now I think even in so many other enactments, the provisions are made for redressal of the grievances. So therefore, in that sense, we have come a long way. In terms of financial services, as Shubham has already mentioned, there are provisions made by RBI by bringing about the schemes of ombudsman, both for banking companies as well as for NBFCs. So therefore, what will be the grievances of the consumers of the banks? What will be the grievances of NBFCs? They have set out, which are slightly different from each other. So therefore, in terms of financial services, I think ombudsman to some extent takes care. But probably what we were discussing is whether we should go that far to the ombudsman level, or should it be redressed before it reaches an ombudsman level. So I think there is a 30 days window before one can go to the ombudsman. So whether in the 30 days window, whether the financial services enterprise, if they can probably sort out the issues, whether by interaction or whenever the first complaint comes, how to handle that and at what level it should be closed. I have come across many companies, including the financial services companies, where probably at every level it will be closed. At what level the grievance is there, at what level it is reaching, whether it is closed or not, continuous follow-up and all these things will be there. So a consumer is a consumer, a grievance is grievance. Wherever there is a service, there is bound to be a grievance. Where there is a grievance, it has to be redressed. When it is not redressed, which means there is a breach. If there is a breach, there should be a remedy or recourse available to it. So the final step is very, very important. Yes, the grievances are bound to be there as we discussed. But what is the ultimate result of the redressal? Whether it is finally, the dispute is finally being redressed, the grievance is redressed or not. That is the most important thing. I think most of the disputes, what is happening is, because it is not being redressed, they are not reaching various levels because of the, say for example, somebody has to go to a forum, somebody may not be having a legal support, somebody may not be having the monetary support, and all these things. Because of this, so many disputes are not going. Otherwise, there has to be a grievance when there is a service. So how to reduce when, or rather before it reaches a stage where unnecessary expenses, maybe in terms of legal expenses or otherwise, are incurred, both by the consumer as well as the person who is providing the service. If we can probably stop it at that level, I think that will be extremely good, even though that will harm the pockets of the lawyers. At the same time, definitely the consumers will have some advantage.
Thank you, Mr. Rao. Just picking up on, I think, your point and the point made earlier. So we've obviously, I guess, seen a shift. I guess if you look at what the situation was 5 or 10 years ago and what we have now with the entire fintech revolution, obviously the way banks, NBFCs, lenders are working is greatly changed. So if we just talk about retail loans, for instance, and grievance redressal or complaints redressal, how do you think we can sort of leverage technology to make it more efficient, both from a lender's perspective, but also from a retail customer or retail borrower's perspective? And obviously, I guess it'll be good to hear both sort of the business and legal side from the panelists. Do you want to go first, Shubham?
Okay, Vishram. So this is a very interesting point when you have talked about that, how in a retail loan we can leverage the technology. So I'll tell you what generally happens with a lot of customers of NBFCs who take a small size retail loan of say 15,000 rupees to buy a cell phone, or say 30,000 rupees in order to buy a laptop. Most of these NBFCs have a tie-up with a particular electronics store where they can get these things. And once they get this loan at a 0% rate of interest, whatever documentation, whatever is being done, it is done and dusted at that point of time. And subsequently, within the next 3 to 6 months, EMIs are supposed to be paid. The problem arises that what the retail customers, what they say that, after 3 months, if there is any lacuna in the product, what I have bought from a particular brand, I will not name any brand because of the infringement issues. They are of the view that if I bought a particular electronic device of a particular brand, which was financed by this NBFC, and it has stopped working after 3 months, I will not be paying EMI for the remaining 3 months. At this stage, what happens that the NBFC is not at fault because they have done the lending not for the warranty of the services, it's for selling of the product. And because of the cutthroat competition, a lot of NBFCs and banks, they have tried to minimize the documentation. So the documentation or the loan agreement or the application form which is being signed and accepted by the customer, which is at times online generated, and at many of the times these retail customers, they do not read the entire terms and conditions. So that becomes a challenge because in most of the terms and conditions for these kind of transaction documents or application forms, it is being written that it is at the discretion of the lender or NBFC to adopt a particular recourse to get their money back, what they have given as borrowing to these retail customers. But due to the limited users of technology by these customers at these customers' end, because at times it is quite unfortunate fact that not everyone may have a cell phone, but everyone may not have the data access, or the people may not be using their mobile handset beyond WhatsApp call or Facebook. No one reads these terms and conditions properly, and then they do not adhere to these things. So with technology, it should be leveraged in a particular way to ensure that the customers are well updated of the changing policies from time to time, which are being rolled out by NBFCs at the first place. And from NBFCs and banks' perspective, it becomes really critical from the recovery mode, because if the client has a particular issue, and if that issue does not get redressed, it is their money which gets stuck. So there has to be a synergy, and a sync has to be established between the expectations of the lenders and what is being sought by the customers. Vishwam, you are on mute, I guess.
Sorry. Thank you, Shubham. Pradeep, just to sort of put you on the spot now, how do you think we have to leverage technology now in a way which helps lenders from a business side, which is still legally compliant and protects the customer? Because obviously at the end of the day, regulators are concerned about customers, courts are concerned about customers.
Okay. Yeah, Vishwam, yeah, so I'll answer this in maybe a 2 or 3 view direction, or 3D view answer I can give with you. The first thing we're talking about technology. Okay. Now, as rightly by Shubham, maybe 2 years back or 3 years back, maybe a year back also, that the use of technology has limited to certain activities. Now today, the pandemic, what so-called pandemic, has taught us to live with technology and go ahead with technology. Now, anything whatever I can think of, or anybody in the group thinking of, is possible to technology. Okay. Now the second thing is, the biggest thing is, now the repercussion of not adhering to the contract what is signed is aware to the customer already. It doesn't mean that he is not aware of, but still it's a situation which makes a customer good or a bad customer. So we at Capital Ford, what we are trying to do right now is, as I said, the small ticket line numbers are going up day by day. So we are talking about millions, not in thousands right now. So we acquire a lakh of customer in a month, where earlier when you talk SME, we acquire 5,000 customer in a year. Now we're talking a lakh in a month. So what we're trying to do is, we have an education series from the technological point of view. So today we are trying to use more of a bot system. We're trying to talk about a video SMS or a video activity which will tell the customer the benefit of being a good customer and comparing to a benefit of being a bad customer. So first thing we're trying to stop that, customer returns should not come up. Grievance should not come up. Because I'm telling you in advance, in warning, see boss, this is the benefit of you being a good credit history, and this is going to benefit you in a long run. And even you see, even RBI is focusing nowadays a lot of ads, समय पे भुगतान करो या आपके ऋण के लिए अच्छा है, all those, So there is a technology which even RBI is put in, which we are putting in also. That's point number 2. Point number 3 is, as I said, everything is on the fly, on the mobile. Now, the only option to have a separate window for a redressal mechanism, which is an online module. So maybe I'm talking about maybe an AI, or maybe a business in AI made or a machine made technology, where when I sign as I said earlier, a breach of contract can easily be identified by the machine also. If I can put a machine into that activity, processing, it can be fly through process that machine can identify whether the breach of contract gave resolution, close and close there and there itself. It can challenge that decision later on. Second, from the cost point of view, it's much cost friendly for a lender point of view. Today, when a lender makes a product, now he foresees certain delinquency and certain thing, and he builds a product with a higher rate because of that. So today, a product which can be easily affordable at a X percentage goes to Y% because of all these things. So if technology comes in the picture by way of, automated resolution, online mediation, online, maybe a redressal system, maybe via using a WhatsApp, because WhatsApp become a very common platform nowadays, will help not only the lender, the borrower, and it saves a lot of cost and time also to everyone. I mean, that's my take.
Okay. That's quite helpful. Thank you, Pradeep. I guess just moving on, we've seen a lot of press lately, I think at least in the last couple of weeks, that there have been a lot of unscrupulous recovery practices being adopted by certain lenders, mostly digital lenders. I just sort of wanted to get your idea on that, what you've seen personally, sort of what's happening, and how we can sort of, take steps to sort of address that. So to give you examples, there's been sort of, for instance, people's mobile phones contract being scraped, phone calls being made to relatives, people being blackmailed with because their photos or videos have now gone to digital lenders because their apps are on the phones. So maybe coming to Mr. Rao first. Mr. Rao, what do you think about these, unscrupulous practices? It's been in the press. The RBI has taken cognizance, but other than, from a purely grievance redressal or financial regulatory perspective, there's obviously a lot of sort of other elements or other laws which would apply. For instance, if people commit suicide, there may be a criminal element or the IPC which applies, or if it's blackmail or defamation threats, etc. There may be sort of a plethora of laws which get captured. So what is sort of you seen in this regard, and what do you think how sort of we can address these issues upfront? Mr. Rao, I think you're on mute.
Yeah, I think we have to look at it in two perspectives. Number one, whether the loans were legally given to the beneficiaries. Number two, the loans themselves are illegal. Now, the unscrupulous recovery practices which you are referring to, or through the apps and all those things, as so many arrests have been made and so many cases have been filed under criminal law, particularly probably in Hyderabad, if I remember rightly. So those are not the loans which are given through legal routes like banks or NBFCs or any other financial service providers. So that is one part. The first part is legally given loans, even where some unscrupulous practices have been followed, that may be probably a few years back. I doubt if any such practices are still going on. So on those acts of unscrupulously probably snatching away the vehicles for which the loans have been given, or the mobile phones or any other goods or articles, the courts have come down heavily on the people who have perpetrated such unscrupulous activities. And they said, nothing doing, you cannot take away like that. You have to follow the due process. The due process is that you file a case and you recover the article. You either go to a civil court or a criminal court. You have to follow the due process. But you cannot snatch away the article on the ground that the installments are not paid. So I think there is right now adequate protection, but unfortunately, every time one will have to go to the court of law to stop or recover that vehicle and get it back, and let that particular financial services provider follow the due process of law to recover the dues. No doubt, for example, in movable property, laws like SFSA are there. But for movable property, right now, there is no such protection. So therefore, there used to be earlier hire purchase and all those things are no more there. Therefore, they cannot do it at this stage. Coming to unscrupulous, yes, I think the law should be more and more stringent, and the system should be able to recognize or identify if such apps are there which are undertaking such activities, and immediately probably the perpetrators should be brought to book. So that is my view.
Thank you, Mr. Rao. Yes, Shubham.
Vishwam, I agree with Rao sir has said right now. Also, just to bring it further, so when these lenders, when they give these kind of retail loans, in the book somehow there is a provisioning which is being made that what will happen when these loans go bad. Suppose if you are giving a small ticket loan of 20,000 rupees, out of which only 10,000 rupees recovery has been made by way of 3 EMIs, and last 3 EMIs things have gone for a toss. So lenders are aware of this particular thing, and that is the reason they have a different kind of recourse against the channel partners or the vendors who get these kind of customers. Having said that, from the lender's perspective, because for 10,000 rupees, it becomes very difficult for a lender to go to the court, because going to a court and seeking justice to ensure that the recovery is being made by the legal process itself takes a lot of time. So what is generally happening is that these lenders, they also try to take a post-dated checks for 2 to 3 months. Because once as a lender, you have a post-dated checks, it acts as a very suitable and apt recovery mode mechanism for the lenders, because if these post-dated checks are encashed before the bank and if they get bounced, 138 NI comes into picture, and which means that such retail customers may face some criminal proceedings, and these things are duly communicated at the time of seeking recovery. So I totally agree with Rao sir that these institutions, banks or NBFCs have a drastically, I'll not say that it has stopped altogether, but it has drastically come down, that these acts of snatching away the vehicle, or as you said, that calling relatives as a blackmailing practice, they have reduced to a greater extent. But that is also not helping these lenders to recover the money. We have to understand that perspective. So we have to come out with different mechanism that how the money which I have given can be brought back to my book. One of the mechanism is obtaining the post-dated checks. If that can be done, it is well and good. There are other things also, that if in the transaction documents, if you have a cross default related clause, because if in the application form the customer is signing and is agreeable that, okay, if you're not able to repay the loan, it may be treated as cross default for the other loans which that person has taken from different institutions, and then you go and furnish those documents to certain banks or creditors, then it becomes a more larger risk for him. So the person also tries to settle the account, and it saves not only time for that person but also for these institutions. But having said that, one thing is very crucial, which I think we should deliberate over this particular discussion, is with respect to like whenever someone approaches the ombudsman, we have seen that a lot of cases gets rejected. A lot of applications get rejected, either because it is not technical, or number two, because it lacks the jurisdiction. Because I may have bought a particular thing in a particular jurisdiction, but it may not be applicable there. So with, I think, ODR and with this digitalization form, I think we should have a very common way that anyone can file any online complaint anywhere for any product or services they have availed and they are not satisfied with that.
Thank you, Shubham. I'm going to come back to that point in terms of the ombudsman rejecting cases, because the statistics are very clear on that. Most of the cases have been actually rejected by the RBI ombudsman on technical grounds. So I'll come back to that. Just moving to you, Pradeep, I wanted to sort of get your thoughts on that. And we've also seen, obviously, the Digital Lending Association of India have come up with a code of conduct, which expressly says that their members will not do contract scraping or indulge in sort of illegal recovery tactics. So what is sort of your perspective on that?
Yeah, so firstly, Vishwam, I mean, we as an organization, we condemn such activities, what is happening in the market, and at least we as an organization in Capital Fund, we ensure that, we follow the strict code of conduct which is laid on by RBI. Whenever all our employees are quarterly reviewed, trained on the code of conduct, and we ensure that, there is no issues coming out on the recovery activities. The second point is basically now whatever we heard in the media in a couple of months back. I mean, these are all, typically small time companies, which were just like mushroom in the overnight, and after 2 days, they are totally vanished also. And the point is all these loans were given on the fly. I mean, there were no documentation collected from them. There's no PDCs and nothing. You would just go and click a site, he'll give you an OTP with your Aadhaar linkage, whatever it is, based on the bureau score, he gives a line of 5,000-10,000. So they captured all those guys who were at a very small ticket size, and they were at the end of receiving end. Now, when you talk about the Digital Lending Association and all those, we are also one of the partners into that. So we have ensured that we don't follow. So we are able to book the law. See, your reputation is at stake. A customer should not be harassed because you're taking a loan from you. As I said earlier in my talk also, and no customer is a good or a bad customer. Situation which makes a customer good or a bad. So the first thing is we need to understand the customer, and try to help him to get the repayment going. Maybe later on. That's point number one. Point number two. Point number three, on the RBI part or on the authority part, regulatory part, there has to be a stringent measurement, and there has to be maybe quarterly audits or quarterly checks of all this, and there has to be a law which has to be which should be punishing such offenses in a stringent manner, not by putting penalties or not by cancelling licenses or not by doing that. Now, until the fear factor doesn't come in, all these things will continue to happen. So until you don't have a law which is fast, it doesn't go for years to get a judgment. Maybe if something comes up, it should be immediately addressed, and the judgment should be passed immediately. So the customer also feel if something is happening to him, then he should approach the law or the legal easily, and he should get a judgment for that.
Thank you, Pradeep. Just, I guess, moving back to the point you were mentioning, Shubham, in terms of disputes grievances being rejected by the ombudsman because on technical grounds, because they were not admissible, they were premature, ombudsman didn't have the jurisdiction. So do you think, and there are obviously fixed timelines and a tiered process when it comes to NBFCs or banks and the grievance redressal and ombudsman. Do you think we can build some ODR mechanisms within these processes before it actually reaches the ombudsman, the RBI and ombudsman is the final authority? So to give you an example, you think, if the grievance is with the customer branch, for instance, the first level, you could build like an online conciliation or mediation to begin with, or if it reaches, at the bank level, at the nodal agency level, I'm guessing different banks and BFCs have different tiers, but if it reaches a higher appellate level, at that time, you can build an online conciliation or mediation mechanism, get in an independent expert to hear both sides and, propose settlement discussions. And if it settles, then, the parties enter into a settlement agreement and it's all fine. If it doesn't, then obviously the end user or the customer can go to the RBI ombudsman or approach the consumer courts, or if it's a bigger lender, then, the DRT or the courts generally. So yeah, I think it'll be quite helpful if we could sort of look at that perspective and what you think about that.
I think, Vishwam, it's a very pertinent point what you have raised, because for every issue which gets highlighted and it goes to the upper forum, so they have a specific timeline. They have a different turnaround time which is there. These turnaround times are extremely lethargic and it's super delayed. So what generally happens that after one point of time, both customer as well as the institution, both of them are fed up, because a matter goes from tier 1 to tier 2, then tier 3, then at a later stage, it will go to the nodal officer or the parallel ombudsman. By that particular time, a lot of, by the time it reaches the final stage where some resolution can be anticipated by either of the parties, both the parties are extremely tired. So what can generally be done is at the time of giving such loans, if by way of a governing law and jurisdiction clause, what we have, we can also, sufficiently build in a clause that if both the parties have a dispute and if they agree that, of course, any party can approach the competent court or a competent forums to seek any kind of justice and redressal. But if both parties agree, they can always look into mediation or conciliation to resolve the matter. And parallelly, suppose if I have a particular grievances, I file an application. By the time that application, which is to be, filed in a specific format, and if there is some certain issues, it will be returned again. I have to refile that application. All these things takes time, at least in the way of a online mechanism and by way of a artificial intelligence. Because if I'm filing an online complaint, or if I'm looking at a particular online complaint as an institution, at least my AI will help me to identify and address the specific areas or lacunas if I'm not satisfied with the nature of complaint at that very point of time. Had these things been manual, which is currently in place when you go to the ombudsman, because there's a human who will look into the application, will tell you that, no, these grounds are not sufficient. You have to provide sufficient annexures to substantiate your claim, and vice versa. So I think the idea what you are stating, that ODR by way of a mediation or conciliation, if agreed by both the parties, will not only save their money, but will also save the time, and also will ensure that the high rates of pendencies which is existing in these redressal forums, they will substantially reduce. And it is up to the courts and up to these forums also to, they can also send a lot of these cases initially for the online conciliation or mediation, because if the ticket size is very less, the person on the other side, rather going to the court if it falls not in his or her jurisdiction, would prefer something more in a digitalized format where seamlessly the person, by sitting on the laptop or by going to a cyber cafe or by way of their cell phone, can at least get to know that what is at what stage their complaint is and what is the next course of action. So I think this is something which is a way ahead, not only for the customers, but also for the lenders, NBFCs, because this is not only going to save a lot of bandwidth, but also it is going to reduce the pendency of cases which is already there on these ombudsmen and other stakeholders.
Thank you, Shubham. Pradeep, what are your thoughts on this?
Yeah, I think I'll take it from where Shubham left. So we're talking about ODRs. I mean, as we talk, I have done already an ODR POC for 3 months right now, the small ticket loans. So I mean, I see the results very encouraging. That's one point. And rightly said by Shubham, I'm able to clear my pendency, which were pending for quite some time. And this pandemic helped me to get into ODR model, and I did it. And let me tell you, the customer acceptance is very much there. Though the current agreement, like Shubham was referring to, we should be part of the the terms of agreement that we will do via online mode. Everything should be there. But even though it's not there, how the procedure typically works is, there is a letter of intent being sent to by the ODR to the customer, by the ODR partner, saying that this is what we will do to give a concurrence. Once he or she get concurrence, then they start the activities. And we are seeing that cases getting resolved. I wouldn't say settled, getting resolved in flat 7 days or even 14 days also, or maximum 25 days, because the customer gets a confidence that that party is a neutral party. The mediator is a neutral mediator. He said, I'm not working for X company. I'm not working for you. I'm a neutral. So I'm going to help you in getting your decision as fast as possible. And from the company viewpoint also, like rightly said, it's saving a lot of cost for me. Just imagine the paperwork what I get into sending notices to them, asking to come to for some mediation somewhere here and there. Somebody has to travel from one city to the other city to do that. Now, being in Bangalore, being in Chhattisgarh, or being in Delhi or Bombay, I can do a mediation of a customer in Jammu or even Dibrugarh also, So that's the easiness. And second, the WhatsApp acceptance by this customer. Customer comes on a Zoom call for a mediation. Customer does a WhatsApp chat on a mediation. On the chat, his case is getting closed. No, they do a chatting on that in a business line or WhatsApp, and customer refers back and the case are getting settled. So I think it's a fantastic way of managing the customer expectation. That's point very critical for us. And second, the biggest thing is the revenue saver for all of us. Otherwise, typically a 5,000 rupees case, to file an arbitration, we will spend double of that money to do that itself, and maybe to do any other activity, at least I'll spend the same amount of loan value for that. But with a mediation with the ODR platform, it just gets settled in maybe 1/10 of the actual cost. That's a big boost to the entire system right now. And we are going to use that going as we did a POC. We're analyzing the POC outcome, and we intend to take it forward now, at least for the small ticket loans, not for the big one.
Sorry, thank you, Pradeep. Just moving on to Mr.
Vishram, sorry, if I may make a very quick comment, what Pradeep has said. So a lot of lenders and NBFCs, they are also deliberating on coming up with a mechanism, like when we are providing a particular product or services to the customer, at the same point of time, we also tell them that if tomorrow there is a dispute, we are the one who will take care of the online mediation or ODRs, so that the customer is, knows that, okay, he just have to log in to a particular portal and rest everything will be taken care by the lender, who may be a disputing party, who may be at the respondent or the defendant side. But at least if this kind of a platform is being provided by NBFCs and lenders, then the customer also cooperates with respect to these ODIs. Otherwise, the customer is of the thought process that I have to go to the court. Why should I engage into another kind of a dispute by way of this ODR mechanism? So this is also being contemplated at a very good, at a high level at a lot of NBFCs, that if while executing a particular agreement or an offer letter, if this particular clause can be, or if this particular thing can be sensitized to the customer, that tomorrow if something goes for a toss, we will help you out by way of an alternate dispute resolution mechanism, which will be by way of an online medium.
Yeah, and Shubham, just to add one more thing here, when you're talking about ODR, I think a couple of months back, even Niti Aayog, Mr. Amitabh Kant was also in one of the calls. I think you were also part of that, Even they are also pushing the ODRs. Even the mess, or no, I wouldn't say the mess, the load what a normal the legal things are pending at the courts, in different courts of India, whether it can be district session or wherever it is, the clearance of it can't happen, and with the consumer case, it can't happen. So I think the ODR is the only medium to get it done. And even they're pushing very hardly. Point number 2 is, if you see globally, the online resolutions are almost a 35-40% case are getting disputed on the online itself, whereas in India it's hardly less than 1%. So there is a lot of scope, and it's just a matter of a time, when things will fall in place. And trust me, at least this will make the life of both lenders and borrowers much more easier. Either you agree, disagree, and close the case there. No need of waiting for judgment to come after 6 months, 3 months, 4 months, whatever. You agree, I don't agree, nothing will happen. Either agree, disagree, and close the matter there and itself. Then you can talk about the ombudsman. Then you talk about the hard measures, the external measure to get it done. At least let's try the easy way of resolving it. Then let's go for the hard way of resolving it.
Thank you, Pradeep. That's very helpful. Thank you, Shubham. Just moving on to Mr. Rao, I think it'll be quite interesting to hear what you think about all of this, leveraging technology to sort of resolve disputes online, both building it within the grievance redressal mechanisms before it reaches the RBI ombudsman, but also from a debt recovery perspective for lenders.
Yeah, exactly. In fact, Pradeep and Shubham both have made very, very valid points. But to probably take it to the right perspective, firstly, I think we need to have a framework, legal framework, where this is recognized, maybe a threshold. We've decided what type of disputes will be referred to ODR and what will be the threshold. That will be the first thing. And then the procedure. The procedure is important because to maintain uniformity and also to give it a legal shape. Say, for example, one organization will have one type of approach to it and the other organization may be having a different type of approach. And coming to the evidentiary value, which probably you wanted to discuss, whether we can do things. Firstly, at the time of, for example, availing the loan, or whenever the framework is put in place, a consent letter should be taken from the maybe customer that he is open for this type of dispute resolution in case such dispute arises in future. So this will help in two ways. Number one, because I have the experience of finding out that today somebody takes a loan, tomorrow he will not be found at that address. Whereas if you have his telephone number or WhatsApp number or some other maybe internet and all these things, email address and all these things, you can trace him anytime you want. Unless, and of course, he changes even the telephone number or even the email ID. So this one way helps. But this is, we are probably talking about the people who are really interested in resolution from their end also. If they are not interested, you cannot drag them in any case. So therefore, we are talking about the cases where even the other person, that is a customer, is also interested in resolution of the dispute through this ODR process. So therefore, the first one may be the consent. The second one may be what will be the evidentiary value tomorrow. Suppose he backs out after promising or after admitting certain things, for example, in a video conferencing, which is recorded. Tomorrow he backs out. Whether that still he can do, that it was done under the coercion or duress or something like that. All these things will have to be seen, whether that can be used as evidence against that particular person, or only the whole process will end when you want to file a case before any tribunal or court. And you can't use anything which you probably used during the course of the ODR. So these things probably, if all these things are deliberated and probably a framework is made, I think ODR, of course, in an unorganized way or maybe an informal way, Pradeep has already told that in number of cases they have done, mostly small cases. So therefore, a threshold has to be fixed if at all we want to go it in a big way. Definitely in times of, and few more points I think Pradeep has made, that how it is going to help in terms of saving of time, in terms of saving money. And like I mentioned, in terms of, say, for example, 5-10 people are different at 5-10 different places. It's very difficult for us to bring them at one place. So all of them can join probably this process at their convenient time or maybe mutually agreed time without moving from one place to the other. And probably while doing their other important works also. Certainly ODR will go a long way in dispute resolution process in terms of saving time and money from both sides.
Thank you, Mr. Rao. I think very valid points indeed. And I think just on that, just sort of for everyone's benefit, I think Niti Aayog has already constituted a committee under Justice A.K. Sikri to sort of come up with a framework for ODR. I think they released a draft report, I think in November 2020. The final report is still expected. Obviously, the draft report is more generally on ODR, not specifically for the financial sector or debt recovery cases or grievance redressal. But I think that's definitely sort of setting the base for ODR generally across sectors, and then to sort of build on to that sector-wise, BFSI, retail, e-commerce, etc. So thank you for that, Mr. Rao. I think probably an opportune time to pick up an audience question. We've got a question from Azan, who says, what is stopping fintech lenders from making their grievance redressal as part of an ODR process? If I may redirect that to Pradeep first.
Okay, I mean, nothing is stopping as such, Vishwam, as we said, we started the initial baby steps already is taken right now. It's a matter of time when it comes into a proper picture. And second, it's a cumulative effort has to come from everyone, So today I do certain activity, let's say my counterpart like Shubham should also do the same activity. So at least acceptance has to come. But there is I don't have any second doubts or thought process at all, In a couple of months time, this will come into a picture in a very, very big manner. Whether a lot of push by the government also, government side also, a lot of push from the lender side like us, like Shubham's company, we all are pushing it for that. It will make everyone's life much more easier. So it's a matter of a time. We started the first step. I think then next 2, 3, 4 steps can move faster now.
Shubham, do you have anything to add to that?
I totally agree with what Pradeep is saying, that it's just a matter of time. And considering the fact that until now arbitration was seen as a very expensive mode for dispute resolution from the lender side also, but with the uses of ODR as a mechanism, which is extremely not only cost effective, time saving, but also it saves your jurisdiction hassle. Like if a particular customer has filed a case is not based in your metropolitan city, and he does not have to file a case against you or the promoters in his or her civil court, which is at some district level where you do not have a legal presence. So it's just a matter of time, because lenders also understand not only that how imperative it is to make this as a part of the governing law and jurisdiction clause of the existing transaction documents, not only to save time from the lender's side, but also it also comes with a lot of other ancillary benefits, because at the end of the day, what you are looking is to recover your money. So if by some or the other way you are able to recover the money by adopting this ODR process as a part of your grievance redressal, this is as what Pradeep has said, that it's just a matter of time. And since the baby steps have been taken, and a lot of NBFCs and banking sectors, companies are trying to make segregation of cases, that for a ticket size of X to Y, we will go for ODR as a mandatory thing before we go to the court of law. So this is probably next time we are discussing this, we will be way ahead from where we are leaving today.
Thank you, Shubham. I think we're almost just 15 minutes away. So I just want to sort of pick on 2 final points, and maybe I'll sort of, maybe we can pick them one by one, but I want to sort of throw them open on the floor. One is just about, the situation we're in, in the middle of the pandemic, and India has been quite badly affected with the second wave. How has that sort of affected the pandemic generally about grievance redressal? Have you seen a lot of grievances, both on the bigger ticket size loans, on the mid-size ticket size loan, and on the retail loans, or have they been quite few and far in between? So that's, I guess, the first one. The second one is obviously, the RBI has come up with a new restructuring framework. And it's probably still too early to maybe comment about that in detail. But one of the things RBI does say is that when lenders come up with their restructuring framework or proposal, they should have an inbuilt grievance redressal mechanism built into that, so the consumers can actually use that. So I guess just taking them up sort of one by one, if I may go to you, Pradeep, first.
Okay, I'll start with the first one. You said about what do you call the first question was on the how. So can you come again? Sorry.
Affected grievances, whether they've increased, they've decreased. What have you seen the impact?
See, yes, I mean definitely. I mean, there's no doubt it has increased. So and though it's increased, but we are more empathic with customers in whatever we are doing to them. That's point number one. Point number two is because of pandemic, from the restructuring 1.0, which was announced last year in August, and now our 2.0 is also announced. So the grievances increased from those set of customers where we were not able to extend the restructuring or the maybe moratorium to those set of customers. Otherwise, wherever the customer approached us, basis the board policy, whatever we have, we extend all the support to them, and they're pretty happy. But again, there are set of customers which doesn't follow the governance or the guidelines of the RBI for restructuring, and they are the ones who grievances still are not able to resolve it. So there is a framework which should work on that part. Now, the restructuring 1.0 was something which we did successfully. The 2.2 is also out in the market right now. The framework around this is happening or just going on. It will take maybe a couple of more days to get it finalized. But what are the best we can do? We are trying to extend all the support to the customer. So at least the pandemic just the second time badly, but at least should give some respite to them from their from the current financial crunch what they're undergoing. So working on that modules and the procedures and the framework and everything. And once we do that, it has to be approved by the board because RBI said mandatory, that it has to approve by the board first before we go out in the market. So that's under the progress right now.
Thank you, Pradeep. Shubham?
Vishwam, so from the lender's perspective, what I have seen that until last year, like the first 6 months, from March until September, this has hit the lenders from the fact that the borrowers were not cooperating. And of course, wherever we have taken the legal action against the borrowers. So I'll give you one instance that there are multiple instances where SARFAESI action was initiated. So under 13.2 of SARFAESI Act, we have pasted the possession notice. We were about to, take the possession of the property under 13.4 or by filing section 14 CMM application. But what happened due to the pandemic that sometimes the person who was supposed to be the CMM, he was not available. Sometimes we did not get the cooperation from the local police station because they were doing the pandemic duties, and owing to which we as a lender were not able to take the possession of the property. So this is something I'm talking about where the legal action against the NPA borrowers started pre-pandemic. And during the course of pandemic, the recovery action was stalled. This was the first aspect. Second aspect from the pandemic was that a lot of, there was the finance ministry strict adherence to all the banks not to classify any borrowers NPA until a particular time frame, which was 31st August. And then later the Supreme Court came into picture. They halted things for a bit. So what happened that a lot of borrowers used this particular technique as a pressure tactic against the lender to, delay the loan or to ask them for some kind of a leeway that we are not able to make the payments, even some monthly payments, which is to be paid for the interest and not for the principal amount. So by that way, it has affected lenders and NBFC because of this pandemic thing. A lot of borrowers who may, a lot of people we know got affected individually and from the corporate side also. But a lot of borrowers who had a very good cash flow, like their promoters were extremely rich. And the fact that during the pandemic last year, they flew to other safer countries and islands, they were not able to, like, we got notices from them saying that, we are in a bad state and we could not repay your loan. And when we did our due diligence, we got to know that that email is coming from Bahamas or Mauritius or somewhere. So, this was a matter of fact which has gone against the lenders, because not all the borrowers got affected. Of course, a lot of borrowers, small size SME borrowers or MSME borrowers who got affected, a lot of relief was given to them. A lot of financial stimulus was provided not only by the government, but also by the lenders in different forms and mechanism. But from the lender's perspective or NBFC's perspective, basis my experience, what I have seen, that things got stalled at two different ends. One where the legal action was already initiated pre-COVID era. And as I told you about with respect to the SARFAESI action 13.4 or section 14 CMM, we are not able to take the possession. And at a later stage, we were not able to initiate the process.
Thank you. Thank you, Shubham. Moving on to you, Mr. Rao. Any comments on the sort of, the new restructuring framework by the RBI? And I guess we've heard from Pradeep and Shubham that, they've obviously faced problems during the pandemic, during the lockdowns, the number of grievances increased. So just from a litigation perspective, there's obviously been a moratorium in place for a long time. But do you think, once the pandemic ends and things are back to normal, hopefully soon, how do you think, the new world will be? Do you think there'll be a lot of cases going to courts? Do you think there'll be litigation as the same as we were in, 2 years ago? Do you think there'll be a lot of grievance redressal internally within the banks and then to the RBI ombudsman? And how will the sort of RBI new framework play in? Sorry, I know that's a lot of questions for you, but it's sort of all mixed up.
So I would say, if we are referring to the 7 June 2019 circular, I would say, I hope we are referring to that only, basically. And subsequently, of course, some other circulars have come.
Yeah.
Probably mainly we are on that. So if that is the case, I would say there is one very major lacuna in there, in the sense that, Shubham or Pradeep, please correct me if I'm wrong. For the loans which are below 1,500 crores, so far the reference date has not been notified. So that becomes a very big lacuna in the sense, because all other circulars by this particular notification, all other circulars which were dealing with the restructuring and all that, they said those ceased to exist. So this comes into existence. But unfortunately, the reference date for the loans below 1,500 crores, that has not been notified. So it is becoming increasingly difficult for the lenders to identify the start date for the review period, post which they probably will take a decision either to go ahead with the restructuring or resolution, or to go ahead with some coercive action in the sense that litigation and anything like that. So therefore, in my view, that becomes a very big lacuna. On one hand, they have said all other circulars dealing with this subject matter, this is to exist, this comes into existence. But most of the loans which are below 1,500 crores, they are coming up for resolution. And number of queries are coming, whether an ICA is required and what will be the reference date, whether this is all in all, this is applicable, or in principle we have to take, or whether certain aspects only we have to take. So there is according to me, there is a big lacuna. Shubham or Pradeep, you may please correct me. So that is one part. Second thing is, yes, time to time, RBI has extended time and probably given some other relaxations insofar as COVID affected enterprises are concerned, as well as the MSME sector. So therefore, I don't see a very big number of cases coming up for litigation and all these things. In my view, some cases are there which are going through the resolution process, but some of them may probably go to litigation, because even after 1 year time, the lenders are unable to take any decisions on that.
Thank you, Mr. Rao. If there's anybody in the audience, for those attending on Zoom, if you want to unmute and ask any question, I think we have about 5 minutes. So I think now is the time. No? Okay. I think then it's probably a safe time to sort of conclude the webinar. I'd like to thank the panelists first. Thank you so much, Mr. Rao, Mr. Vishwanath, and Mr. Saket for joining us. I think it was really nice to hear your thoughts on grievance redressal and ODR generally in the finance space, specifically for NBFCs, but I think we covered banks generally as well, and we also touched upon different sectors. So thank you so much for that. It was a pleasure having you. If I may just request Chaitanya to close the session now.
Thank you, sir. Thank you, participants, for attending this session. And special thanks to Pradeep sir, Shubham sir, and Damodar sir for sparing your valuable time and discussing this important topic in great detail and pointing out the issues and technical difficulties which the schemes may have in future. So participants, this brings us to the end of today's session. See you all in the next session with other important topics and judgments. So till then, goodbye, take care, stay home and stay safe. Thank you so much.
Thank you.
Thank you. Just
Thank you, everyone.
Thank
just
you.
for everyone's benefit, the next webinar will be on 25th of June, so last Friday. We made an exception for May, but we'll continue with the last Friday of every month. So see you on 25th of June at 5 p.m. Thank you.
Thank you.
Okay, thank you, everyone.
Thank you.